This video is sponsored by PelucidFX.com. Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video. As usual, guys, now let's take a look at the gold. In fact, on the gold market, in the recent days, not much to comment, since our major expectation here is to understand what is really going on right now and whether it will turn to some really reversal pattern, or that is just a minor bounce up and maybe some position closing, as some analysis said. That is just a profit taking of the solid 2013 year and so on, and market was really could return right back to the downward action. We do not know yet. From the technical point of view, there are just two major levels exist for any reversal situation. Is the current lows, because if market will pass through the 120, that 12 even area and turns to the downside, that will lead market to the lower targets that we have specified. It stands approximately around 1000 even. Well, anyway, if market will return right back down to the previous lows, it will mean with a high probability that market will continue to move lower. To speak about the possible reversal here on the gold market, as usual, we need to get the reversal swing. And reversal swing is when the market forms upward swing greater than the previous swing to the downside. And currently we do not see it yet. So we see retracement. Market is forming the lower lows and lower highs. So you can see it's no reversal swing yet. And to speak, if we will take a look at this most recent action, currently I do not like it very much, because you can see that market has stopped somewhere. It not even has reached the resistance. It not has even touched the 1215 area, 50 area. It's FIB resistance. Nor market has hit the monthly and weekly pivot resistance one. And market, in fact, hasn't quite even reached the natural support resistance line. That could be also the possible the neckline of this head and shoulders pattern that we have discussed. So if it will be the head and shoulders, the market probably should reach the neckline before starting to form the right shoulder or something of that sort. Because if market will start to form something that will look like the shoulder, it will be a bit skewed pattern, and not, in fact, natural development will be. That's why the moment that market turns to the downside somewhere in this area and hasn't quite even reached not even the significant resistance area, market hasn't hit neither FIB resistance nor pivot resistance nor natural support resistance. It's just has turned somewhere in this area. That's all. Well, that's makes me look at this bounce up with the suspicion in the recent couple of trading sessions, and currently I just would like to see what will happen, because right now either taking the long position or taking the short position will be accompanied by the significant risk, because market hasn't formed anything clearer yet. So we do not see any clear pattern just yet here. Yes, market now stands above both pivots. It has retested it, but that's not sufficient to speak about the potential taking either long or short position on the daily time frame chart. On the 4-hour time frame chart, yesterday we said that if market will pass through the weekly pivot point right back down, and that because this is simultaneously the neckline of this double bottom pattern on the 4-hour time frame chart, and especially if market will take out of these lows, well, that will increase the confidence, our confidence that probably market is really reestablishing the move down, because that will be not quite natural behavior for appearing of the head and shoulders pattern. So market has reversed down, move again right below this area, and hasn't quite reached the neckline. That will be some more bearish action rather than the challenge on the potential reverse head and shoulders pattern. That's why yesterday we said that we need to see how market will behave around this area. So now we see that market has found the support here. It's bounced up. Okay. And that keeps the door open for possible upward continuation, because market could show some continuation up and finally reach the significant resistance that we expect to see. So market should reach somewhere in there between the 1250, 1267 to make this possible, to make in general appearing of this reverse head and shoulders pattern possible. That is what I would like to see. If market will fail to do that and will show just minor bounce of this support and then return right back down, well guys, this will probably mean that market will reach at minimum these previous lows, or even that could be the first bell of the possible downward continuation, and that will significantly reduce the value of this possible bounce up, because it will not realize the hopes of the bulls who speak about the possible rebound on the gold market and really significant move up. That's what the technical picture tells us. So right now, guys, personally, the gold market's not very attractive for me right now, and I do not want to make any trades in the current circumstances on the gold market. Well, maybe if you will find something more interesting on the lower time frames, on the 15-minute chart, on the 30-minute chart, maybe there are some patterns exist there. But speaking about the daily picture, since we have the daily video update, so currently I think that is not the time to make the active trades on the gold market. So we need to get some more clarification from the market what's really to expect. Either upward continuation, because guys, if market will form the head and shoulders and this pattern will look good, we will have a lot of time to make the position, and our risk reward ratio will be solid, because the minimum target that market will hit probably will be around 1330 area. That is the yearly pivot point, where yearly pivot point on the gold market stands. And we will get more confidence because we will get the pattern on our back that will suggest the upward action. We will get clearer areas where we should place our stop and where we should get our target. But right now we can't even be sure that market will form this head and shoulders at all, because at any moment market could just plunge down and return right back to this area. In this case we also will get better situation, because in this case if market will move right back down, that will become clearer for us that we should be prepared for the downward continuation. That's also his advantage. But right now when the market stands in the same position, hasn't quite reached the neckline, as hasn't quite shown yet the plunge down, so it's some intermediate position, and in such circumstances I do not see any objects for active trading.